So, welcome you all to our Social Impact Investment panel. I'm Matei Dumitrescu. I'm honored to host today this panel, along with these three distinguished personalities of the CEE impact ecosystem, Eva, Silke, and Renata. I would like to say a few words about me because most people know me by my investor hat, as Ciprian told earlier, whether it's the vice president of Tech Angels, the founder of Smart Impact Capital, or lately the partner of RockX. My journey, however, into this investment world started back in 2014 when I began working with the Investment Ready program in Vienna. Investment Ready program is still the most impact-focused acceleration program in CEE, and it's been active in 17 countries. And I remember that back in 2014, our demo day for our accelerator took place in a small room in Vienna with 2 investors and 7 startups. But now it turned out in what it is known as CEE Impact Days, which is the most important impact investing event in CEE, where we gather up to 400 impact practitioners, fund, banks, ventures, authorities, everybody aligned to reach the UN Sustainable Development Goals until 2030. And that's where I met all our guest panelists in this event. Yeah. And today, with their support, we'll have a conversation about the future of social impact and investments in this area. And first, I'd like to hand over the mic to Eva in order to introduce herself. Eva from European Venture Philanthropy Association.
All right, thank you. Thank you so much, Matei. It is really great to be here online, actually. Always better to be in person, but I hope we'll get there one day. We'll get back there one day. I mean, I think through my presentation, I will basically also explain to you what I'm doing. I've been with EVPA for the last 6 years. Also, I'm a co-founder of the first Polish Venture Philanthropy Fund, and I'm also a social entrepreneur because I also run a small activity using mountains and natural horsemanship in working with different disadvantaged groups. So I think in my work, I really combine all kinds of experiences. On one hand, you know, being a social entrepreneur, knowing what does it mean to raise money, to work with different partners, but also what does it mean to be an investor when you have to decide which projects to support and why, and how those choices are difficult. So what I wanted to do with my presentation is really to start with a very quick overview of the topic, because like Matei gave an example of the investment readiness program and the CEE Impact Days, basically we know that impact investment is actually a fact. It's not anymore a story that we are just trying to happen, but this is really happening. This first slide is one of the proofs that actually shows that right now financial institutions, investors, companies are really looking at risks related to environment, education, economic development, and those are the risks that they need to mitigate in their work, meaning that they also need to invest in those topics, right? So this is really on the agenda right now. This is a World Economic Forum Global Risk Report right now. It's being issued every year. I encourage you to look at that as well. Another graph from Morgan Stanley. So we are really talking about, you know, the major financial institutions in economy today, also shows that actually sustainability is profitable and more resilient. So we already have data collected in the past years that shows that investment in sustainability, in solutions related to environment, social or governance issues actually bring more return and produce higher returns than traditional investment. So that actually shows that we have this transition of traditional investors moving into impact investing, not only because it is really a way to go when we want to address the sustainable development goals, but also it can produce some financial returns, and that way can be more attractive to traditional investors. And this is where impact investment, social investment, or venture philanthropy, as we call it today, is really, you know, moving along and boosting, let's say. And this is also the space where we work as EVPA, trying to combine this traditional investment approach with philanthropy, meaning that we really want to create a space where businesses with impact can grow, where practitioners can learn how to do it, so that we actually have more funds available for this topic. So we as EVPA, as the European Venture Philanthropy Association, we are trying to bring practitioners, but also newcomers into the space. And we work with diverse stakeholders in order to move this field forward. Few words about the core principles. For me, I think this is really, those are the three core principles of impact investment or venture philanthropy, just for all of you to have an equal understanding of what we are talking about. So we are talking about tailored financing, right? So we are talking about financial instruments that are adjusted to the level of development of the business. We have capacity building, non-financial support through programs like investment readiness, but also non-financial support that impact investment funds are applying. And then we have impact measurement and management. And all of that has to be done with an intention to achieve social impact. And as you will see also from the examples that Silke and Renata will be showcasing, there has to be a theory of change for every business with impact, or for every social business as well. That's the most complicated slide today, probably, but I think it shows really well this whole spectrum of what does it mean to invest for impact or with impact. And we really talk about the whole space of activities from traditional grant making through providing other financial instruments like smart grants, recoverable grants, debt, and also equity. And then you can see on the slide that there are different types of entities that can avail from this slide. Today, I think at this panel, you're going to see, I will show you very briefly an example of Valores, which is really using smart grants through venture philanthropy to support social purpose organizations, NGOs, with potential to generate some revenue, but not necessarily. And then we'll have Tilia Impact Ventures that actually uses debt instruments and equity. And then Feels Good Capital, our newest, one of the newest funds in Central Europe. That is actually, I would assume, Renata, that you are mainly working with equity instruments. And for all of you who are watching this, I think what you can do later on is a small exercise for yourself to try to see where your entity or organization or business that you are representing may fit into this, let's say, spectrum of impact investment, which organization you are, and maybe you can think also what type of financial instrument you can use. A quick overview of our activities in Central Europe. I think it's quite interesting because EVPA started the work in Central Europe 6 years ago. We don't have too many members yet, 20 only right now, coming from 13 countries, some also non-EU, which I'm actually really happy about. Unfortunately, we don't have yet a member in Romania. So I hope that maybe by this presentation, we'll be able to mobilize more members. Very diverse members, foundations, impact funds, many actually originating from different acceleration programs. The challenges that we see, I think Silke also may talk about this a little bit more, is we still feel that we don't have enough of the right level and type of financial instruments that would actually help social entrepreneurs to grow. Lack of stable infrastructure for social organizations. So we are talking about some organizations providing capacity buildings that are often relying on grants, short-term grants or other highly restricted funding. And I think we see more and more that there is a need for stronger collaboration in the region because we are such a fragmented region as well, many small countries with a couple of bigger ones. That's the data and the map from our industry survey that we do as EVPA every year, and a listing of actually, I think at the moment, the funds and the venture philanthropy funds, but also impact investment funds that operate in Central Europe. We hope that there will be more, and maybe there are also some that we don't know of. So I'll be happy to fill it in. one of the last things about Central Europe that I want to share with you is that we as EVPA, we are just launching a program with DG NEAR, with the European Commission, and we will be actually launching a 5-year program for 7 countries that are here from the Eastern Partnership. And through those activities, we hope to actually copy-paste a little bit and promote the development of small impact investment funds as a kind of pilots and role models to develop bigger funds. And 2 minutes, if I may, and Matei, you tell me if I may continue for 2 minutes.
Yeah, 2 minutes. You have 2 minutes. Counting down.
Okay, so very briefly, I just wanted to give you an example of the venture philanthropy fund that we started in Poland a couple of years ago with the private equity community that actually started with an accelerator program. Right now we are in the 9th edition of the program, and this combined program actually offers almost a 5-year engagement for social entrepreneurs. And we've been doing this only with private individuals. We raised 2 funds, altogether 1.23 million euro. And the majority of the people that contributed into this venture philanthropy fund, actually they were mentors in our social business accelerator program. So just to show you that actually all the different acceleration activities that you run may be a beginning to develop a venture philanthropy fund or an impact investment fund with potential investors. So we as venture philanthropy fund, we only work with grants, smart grants, unrestricted. We decide together with the organizations on how those money should be spent, on what type of activities, and we engage with them for 3 years with a lot of capacity building and non-financial support. So Valores is really, when you remember the slide that I presented about the spectrum of impact investment, is really at the beginning, right? It's really smart grants, unrestricted funding, set up, invested in a collaborative way with the team. And I think the examples that Silke and Renata will show is a bit different types of financial instruments that can be used, but I still believe that all of us, we can sign up to those 3 principles of impact investment, where we actually have tailored financial instruments, capacity building for our investees, and also impact measurement. Thank you.
Thank you, Eva. Thank you for your presentation and for what you're doing for the ecosystem in this part of the world. Next, I would like to invite Renata on stage. Renata is representing Feels Good, which is the latest impact investment fund created in our region.
Yes,
and
hello everybody.
As far as I know, the second one.
Second, it's a second.
It's the second. We have only 2.
Yeah,
we have only 2 impact funds in this region. So,
3,
Renata,
and
you have the stage.
Don't forget about Tilia.
Yes, if we are speaking about an extended CEE region,
good morning, everybody. I'm really honored to be here with you and to see you after a long time. I'm Renata Brkić. I'm from Zagreb, Croatia. By background, an entrepreneur. This is my the first and the most loved role. I'm an impact entrepreneur, and during the years, I have somehow, by the need, transferred to the side of becoming the impact investor. First, in a sense, as a business angel, and then as a founder of Feels Good. I will just present Feels Good in short and what we are bringing. And for the colleagues, I need to say that it took me 3 years to put Feels Good together. Not only me, but me and my team. And we did it from Croatia. We could only start thinking of doing it after the 2013-14 when Croatia entered the EU. So we are behind all of you by 8 years, and this makes a difference. There were no risk funding available in Croatia until the last year. The first venture fund, Phil Rouge Capital, actually started investing only in the 2019 in Croatia. In parallel, we were building Feels Good, and it couldn't have been done without belonging to the EU family, because the principal investor in the fund is European Investment Fund, EIF, same as with Impact Ventures. It's from the same instrument, Social Impact Accelerator. Feels Good is just ready. Its size is 30 million euros, and it is meant geographically primarily for Croatia and Slovenia. Why? Because we somehow, these two countries, we somehow naturally belong together. We have a common history. Geographically, we are very close, and the businesses are interconnected. So our geographic strategy was Croatia and Slovenia, in which 80% of this 30 million is supposed to be invested, while 20% is our mandate is for the EU, which means, unfortunately, for the Western Balkan countries are not the candidates for this fund, but the projects and companies from the EU, from Romania. This was one of the questions you asked when preparing ourselves for this. Yes, we can co-invest with other funds for the companies that are from the EU. The next slide is, thank you, Eva, for a great introduction on impact investing. And this is what I like to put it simple and to give some definition of impact. This is the one I like. So that impact is the measure of an action's benefit to people and planet, which goes beyond minimizing harmful outcomes to creating good ones by creating positive impact. And it has two dimensions. It has social and environmental dimension. Feels Good is a social impact venture fund, which means that environmental impact only is not enough to be the candidate for the Feels Good deal flow. Social is very important. Planet, yes, of course, but you need to touch the person, and the business needs to touch as many people as possible for good. And the next slide is about the differences between traditional investing and impact investing. What is most important here with us is that this doing good needs to be intentional, and it is different from the corporate social responsibility. So in corporate social responsibility, you say, by doing my business, I will not do harm and damage. But here you say, I will intentionally do good, and I will measure it, and I will report it, and I will touch as many people as possible. And this is these are the first lessons we say to anybody from the deal flow coming to Feels Good and trying to get the funding from Feels Good. So we are not we are open for everybody. We belong to that right side of this Eva slide. So we really are able and can invest in traditional businesses with intentional impact. And like our aim is that all businesses in the world become the impact businesses, and that they embed the impact in their business models, because the entrepreneurs solve problems. They go after the problem. They many times they're not aware of the positive impact they're doing, and this is what we are seeking that this is digged out in their business plan. So this is again, Eva has said same in the introduction, so I will go over it. Impact has become very important, and all traditional businesses are trying to embed impact in their business. When I say the big businesses, the listed companies, and of course the Americas and the UK, they are the leaders here. We are a bit behind in the region. But the big thing was when Larry Flink, he is the CEO of the BlackRock. BlackRock is the biggest asset manager in the world. In his address in the annual letter of 2019 to the companies, he actually, for the first time, said clearly that the social impact should be embedded in businesses and that they will monitor it. Next year, he forgot about social, just environmental left, but okay. And but these are important moments, and because when investors talk, businesses listen. The other event is the political EU directive from 2014, which forced the listed companies to do the non-financial reporting. So here comes feels good. We believe that Croatian and Slovenian SMEs represent really underserved institutional investor market opportunity that can create considerable value locally, regionally, and globally. When designing feels good, when going through the due diligence process in the past 3 years, we have screened around 400 deals, companies, projects. We are sector agnostic because we are going for impact. We are not going for health, education, agriculture only. So sector agnostic, and we are seeking the goals in the businesses. 80 of them opened the books to us. I'm telling about Croatian and Slovenian companies because we needed to prove to the investors, to the EIF, but to the even more to the traditional investors who are matchers in Croatia, and these are the pension funds, which are very traditional investors. We needed to teach them impact and to make them understand and believe. So we have presented 80 companies, out of which 14 we judged as investment ready. And out of these 14, we have prepared the first top three that are going to be our first investments in the first quarter of next year, when we will actually start investing. And this was important because it was, for us, it was a big thing because we have proven that Croatia and Slovenia, as a part of this region, have capacity to absorb this kind of investment, to make profit on it, and to come with impact. This is my team. It's 5 of us. 3 of us are founding partners, and we have the manager in Slovenia. We are based in Zagreb, but apart from our team, these 4 guys in the corner, these are our impact advisors. We couldn't have done it alone. My background is impact entrepreneur and business angel, and the other guys are the hardcore from finance industry with the venture track record. This was very difficult, and so I first needed to convince them, and then the investors. And now we are working all together. But these 4 guys, these are the academics, and they were helpful. They're with me and with us from the first days. Danica is the head of the Bled School of Management in Slovenia, the dean. Paul Stubbs is the sociologist, and and Majda and Misla are the professors of the corporate social responsibility at the University of Economics here in Zagreb. So the 4 of us actually first did exercise on us. Of them, they first taught us, and then they were actually designing for all of the deal flow in the due diligence. They were designing impact criteria and measurements, and they are very important members of our teams. So whenever we consider someone from the investment in the second phase of a due diligence, they go and they work for impact, one of the impact finalists who help them understand. This is what I like to stress, because we really believe, and this is how we communicate, and we now have feedback, and everybody has become, even the traditional funds we now have in Croatia, private equity funds and the traditional venture fund, they have all been started to flirt with the impact. And somehow the understanding is, and we really think it's true, that as venture capital, the hardcore venture capital was helpful and has helped this technological revolution, we think that the impact capital and impact investments are needed now to make the impact revolution in the coming years. Being in the region and today with the connections, with internet, with everything globally and digitally, we also believe that that you don't need to be in the Silicon Valley to start a unicorn, and that you can do it if you design the business model right, and if you go for the market and make the volumes by touching as many people as possible. So it's just a challenge for a discussion. Why not the impact unicorn? And I will close by this global impact investment market size. These are fresh numbers. Look how it's growing. It's really growing, and the world and the industry and the politics have become aware of it, and the interest for impact investing and for turning the money into smart impact money is in trend. So this is
looks very promising.
Too long, yeah.
Very promising, Renata. Thank you very much for your presentation, and congratulations. And now, Silke, you have the floor.
Thank you. Let me introduce also myself. My name is Silke Horakova. I'm a German national living in the Czech Republic, where I spent all my professional life. And I founded 2 years ago, together with my partner, Tilia Impact Ventures, which was one of the first social impact funds in the Czech Republic. Apart from this, I have co-founded 2 foundations in the Czech Republic. And we have also a family business, which is the largest book publishing house in the Czech Republic. And I have been involved in the social sector, let's say, or social impact sector for the last 10 years, when we started in 2010 with the first social accelerator program in the Czech Republic. I was a part of the design, and we have developed quite some of these accelerator programs in the meantime. And I think we will speak about the ecosystem a little bit in length after that. A lot has been said by Eva and Renata about the importance of impact investment and definitions and so on. So I will concentrate a little bit more on our fund, what we have done, as let's take it as a case study. 2 years ago, we went into this saying that has to be a pilot project. The fund is not huge. We consider this really as a test case, not only for the Czech Republic, but also for the region. We wanted to test if impact investment is possible and can attract investors. That was the most important thesis, actually. So we closed our first fund, our first closing we had in 2018. And I think our biggest strength is actually our team. We have 5 very engaged team members with very different background. So it's really a mixture between business, investment experience, and impact. We are also lucky to work with an investment committee, which consists of leading regional private equity, venture capital, and startup investors. They bring a lot of expertise from the investment side, but they are also philanthropists. And then we have an advisory board, which consists more of impact experts at the European level. Our fund is a closed-end fund. That means it was invested at the beginning, and it has a beginning and an end. And our investment thesis was to build sustainable social business models and help them to to scale. Actually, with regard to financial instruments, and Eva mentioned this, I think we also wanted to pilot new instruments, what we have done. We can use the entire spectrum of financial instruments which are available for social finance. We have seen a slight change in our focus because we couldn't actually find so many investment readiness ready enterprises in the social sector, in the NGO sector. So our last 3 investments were actually people, I would call them social entrepreneurs with some business background. And the next venture was now targeting a social problem. Next slide, please. We have also worked a lot on redefining our investment themes. We have analyzed the situation in the Czech Republic where we can be effective and additional mainly. So far we have supported projects in civic participation and transparency, the circular economy, and social inclusion and health. At the moment, we are looking closely at projects in quality education, medtech, but with a focus on disadvantaged groups, sustainable agriculture, responsible consumption, like food waste, and labor market inclusion. Next, please. This was a little bit our journey. Actually, as I mentioned, we had our first closing, which was 1.7 million euro in 2018 in November, and 1 year later was the second closing. So we have closed the entire fund with 2.5 million euro. One word to our investors. Our investors came mainly at the beginning from the social side. That means 2 foundations which wanted to expand into impact investment, but they missed the know-how. So they were looking for partners. But then we actually were successful in gaining about 20 private investors, which has a lot to do with awareness building about impact investment. So we are very lucky to have them on board because they help us also a lot with contacts for our investees and so on. We made actually at our first closing, our first investment, which was StatLab. This was actually a typical hybrid business model. It means a social organization with a non-for-profit organization. They are specializing in analysis, data analysis of public tenders, and tackle the problem of inefficiency and lack of transparency in the sector of public tenders. They are doing also red flag reports to help the sector. It means public institutions and private institutions to become more efficient and transparent. Our next investment was MIVA and Dot Classes. I will come back to them. Can you go back for a second? Thank you. And the last investment was actually a month ago, 2 months ago. That was Circle. This is an international regional matching platform for the sale of waste material and a consulting firm for large corporates on waste management improvement. Next, please. So this is actually what we are committing to. These are the Sustainable Development Goals of the United Nations. I think you are all aware of them. So we select our projects, doing due diligence, and then building an impact strategy with our investee companies and tracking post-investment progress against the contribution the company made to one or more of the social Sustainable Development Goals. Next, please. These are our investment criteria. It's pretty clear and not so much different from VCs. But in addition, and we consider ourselves, Eva was making this difference clear for impact investors and with impact investors. We are clearly a for impact investor. So we first always look if there is a sufficient, deep and scaling impact in the strategy of the enterprise. We also look at the alignment between business model and impact, which is important, not to risk a so-called mission drift. And we always look if we can, as a fund, have an additional role bring in not only finance, but always some smart business knowledge, market knowledge, and so on. Next one, please. Awareness building is actually in the heart of everything what we are doing. We are very proud that 3 of our investee companies have been awarded the prestigious SDG awards in the category of social business. I also would like to point out this slide, our collaboration with the University of Economy, the Faculty of Entrepreneurship, on the first social entrepreneurship course in the Czech Republic. And I think that's very important, and we will discuss maybe a little bit on the ecosystem again. We need to educate social entrepreneurs in the region. Insofar, I think this is really essential that we also work with universities on this. We present our case at conferences. We are mentors or jury members of many social accelerator programs, and but also classical startup competitions. Next, please. This is one of our portfolio companies. I would like to show at the end 2 of them. This one is Dot Classes. It's a company, a social enterprise, which tackles the problem of vision impairment, especially in the developing world. They came up with a patented innovation. It's, let's say, one-size-fits-all glasses on the principle of a good enough vision. This is important because they can be extremely economical in their business model. So they have a limited choice of lens powers and very simple but effective vision testing kits for small entrepreneurs. With this radical business model, they are able to deliver extremely cheap classes to governments, NGOs, chains of eye care clinics, or micro-entrepreneur networks in the developing world. The effect of providing corrective eyeglasses to people with vision deficiencies in developing countries can be also quantified. We can see up to 30% of increase in productivity, 20% of increase of income of those people, a part, of course, of the increasing learning capacity of children. And there is a strong additional effect of job creation to small entrepreneurs, which provided the last mile service in selling these classes quite often. Next, please. This is the impact view on the company. We have established with them impact KPIs. We always do the impact strategy with quantitative and qualitative KPIs. And we track this record, we track the progress really like a business progress. So in this case, we have quantified distribution of glasses to specified target groups, as you can see, to make sure that these glasses are really getting to the most people in need at the end of the pyramid. The company actually we invested in at the beginning of the year, just when the pandemic started. So it was really an unfortunate start because of all the travel bans. Nevertheless, the company has been able in the meantime to establish a sales organization in 15 countries in Africa and Asia. And they have been the winner of the SDG Awards in 2020 this year. The next slide, please. This is a second example. This is MIWA, which stands for minimum waste. This is a company in the circular economy. And they came up with an entire reuse system for packaging-free sale, consisting of dispensers equipped with smart technology, which communicates with logistics and the cashier system. And on the other side, an intelligent cup for consumers. Next, please. So the company has actually 3 reuse loops and have been able to eliminate single-use packaging along the entire product value chain. That means these dispensers are circulating between the producer and the retailer. And on the other side, there is the smart cup from the consumer side, which also communicates with the technology and is on a rotating principle. And of course, when we started to look at this investment, we were provided with a life cycle assessment of the effect of the reduction of emission, and the result was actually that there is a 70% lower negative environmental impact compared with single-use packaging, depending on the material. In 2019, the company was one of 3 winners of the European Social Innovation Competition organized by the European Commission and the New Plastic Economy Innovation Prize, as well as the SDG Awards. They are often quoted as best practice by the European Union publications, and they are part of the Consumer Beyond Disposability program launched by the World Economic Forum, where they also presented their case. They have also established an education center, which is situated in the center of Prague, especially for young people to learn more about protection of the environment. From the business side, they are running projects in the Czech Republic, in Switzerland, a large project together with Nestle, and in France and Germany. And most recently, despite all the problems in the pandemic crisis, they have been able to successfully raise another €1 million investment from a German strategic investor. That was, next please, I think that was all from my side. And I think we can come back to some questions.
Thank you, Silke. It was great to see such examples. I was about to ask you after your presentation about some examples, but you're the first to show them. But anyway, coming back to Renata, I'd love to hear more about such examples from your area, even if you didn't invest yet in some startups, about some good example of impact startups in Croatia or Slovenia.
Yes, I told in my presentation that we have the 3 of them ready, and I will start with the one that is called Omolab. It's a group, it's a team from Croatia who's been around for 3 years already developing a project. And what they did, they had invented a special font for the dyslexic people. Why? Because they were in need for that, and they are dyslexic themselves. It's an app. Once you download it, you can do it in your mobile, in your desktop, in your website. The font changes, your internet banking font from your bank changes completely to the way that you can read, and that you can for the first time do the things yourself. So they were developing it. It's a very professional team from Split. They were developing it for a year, and then they did the Croatian version, and then they received a small seed investment from Funderbin in the second year. Which enabled them start working on the English version. And now they are done with the Croatian and English version, and they are the candidate for an investment with us, and we will invest in them in order that they do the 2 more languages, and this is German and Spanish. So this is an obvious example of the good business model solving a problem of a very vulnerable group, and the percentage of these people is high. It depends on the language. In Croatian, it's up to 20%. Then, and this is how you choose the languages, how to scale. For example, this business can never scale into China, because Chinese language is not a written language, it's pictures, so there are no dyslexics in there. And this is the wanted way. So as per our strategy, we need to find such businesses coming out of Croatia and Slovenia, growing through Europe and scaling then globally. So we wouldn't, we need to have the impact at home, then in Europe, and then globally. So we wouldn't invest in a company in something that is originating from Croatia and doing all the income in the States, because we need to make the impact at home and then scale. This is one example. Another example, yeah.
But what I wanted to ask you from the point of view of a VC, I understand that you can scale this impact throughout the world, but what's their financial outlook? How are they doing in financial?
They're doing fine, because they're not only end users, not only dyslexic persons are there end consumers. But they do the business to business. So their biggest buyers are banks, are people who want to do it for their end consumers, and whoever insurance company, whoever want to make their website and present themselves readable for this target group. You know, this is one portion. The other portion is the government, the Ministry of Education, in the first place for the schools, and they've been very busy now in the time of pandemic, in COVID, when we had a school online in Croatia. So they have sold a lot. They have entered the main educational agency of the country, who is of the government, who is responsible for this online school. So this is where the money is, and it is very replicable to and they touch the people. They bring. You can count people whose life is becoming better, and their access to everything, to education, to books, to information.
And now a question for all of you, whichever wants to pick it up. If you're a fund, Silke or Renata, you have, and Eva, of course, but if you are a fund per se, you have to provide returns for your investors. How you can merge profits with purpose? Do you have a specific strategy to do this?
I think it's about the selection of your projects and your
selection.
Strategy. How you screen your projects. We have a screening table which we always start our screening process, and there are very specified criteria on impact, and we start really to look first at impact, as I said, since we are an impact first fund, and it has to fulfill. And then we have it's really a table with a scoring from 1 to 3, and only if it fulfills a level. So we can see on the impact side, the deep impact on a target group and the potential to scale the impact. And ideally to scale up, which means to come to legislation and governments and so on. So if you see this potential, that's the first. But then to answer your question, of course, we look closely at business case. And we do this as a venture capitalist would do. And maybe proof of this is, we distinguish whatever said, and I think it's very useful what EVPA introduced here, this distinction between for impact and with impact, because I can see in our region, at least in my country, more and more, we see investors which go slightly and from time to time into impact, because there's the potential also from the upside. So even if you look at one project from the impact side, and then you go on the second point on the business side, there might be a VC who looks from the other way around and finds it attractive as well, which is an ideal situation. And to be frank, the Dot Glasses project, we have co-invested with a large Belgian impact fund, but also, and many Western European business angels, but there's also a Czech classical VC fund. So I think we have to think a little bit also about this kind of cooperation. And to come back to your question, if you look at both, it's more difficult in this sense for a VC, because the selection is much more limited, but you have to be disciplined in this. You have to be disciplined to make sure the company is also business-wise successful.
So,
yeah,
maybe
I can just add from the perspective of our EVPA members that and the impact investment funds like, Ultra Venture from Italy, or Bon Venture from Germany, or Ananda from Germany as well. Actually, I think in all the conversations that we had is that if the business is successful, and of course, taking into consideration everything what Silke said when it comes to selection process and criteria of impact, but actually if the business is successful, then impact-wise it is successful as well. So that has to go together. And I think this comment on the venture capital funds actually starting looking at their portfolio of companies from this impact perspective, this is something that we started to observe slowly as well, because the awareness of investor community is increasing, right? I mean, as the data that I showed said, and basically suddenly people start to realize that sometimes even within their own portfolio, they already have businesses with impact, but nobody paid attention to that, right? Or even the businesses themselves, they did not really realize. And if they start to realize, they can be really much better in addressing those different social challenges, because then they would work on the business model that would also actually aim to increase this impact, right? Not only financial returns for investors.
Okay, so I wanted to draw a conclusion, but correct me if I'm wrong. You're not a philanthropy fund. You are more like a highly specialized regular VC, which has a two-step process of assessing their startups. The first one is assessing their impact, and then putting the startups in the shortlist into the second part of the process, which is the regular VC assessment process. Is it true?
Yes.
So it's more than a VC.
Yeah, in our case, it's even vice versa. In our case, profit is mandatory. It's not questionable. If you cannot show profit, we cannot consider it at all. But profit for us is not enough. We need impact in addition to profit. We are very demanding. So this is the...
But I think also, Renata, you can mention, right, that actually the carry for the fund managers in the funds supported by European Investment Fund is connected with achieving impact goals. So the fund managers are paid, or they gain more financially, not only because they deliver on financial KPIs, but also on impact KPIs. And I don't know why we should not use this term of impact investors, actually, right? I think that should be really not the philanthropy. We are not talking about philanthropies. We are really
not at all. Not at all.
Impact investors.
I can also confirm that's a feature we have.
Instruments, right?
Sorry, Eva. I can also confirm what you said. We have introduced it in our fund. It means at the end, we are looking at the KPIs, at the collective impact KPIs. And if they have been reached, the remuneration is bound, in our case, really to achieving impact.
Yes.
Absolutely. Yeah.
Yeah. Ciprian, welcome back to the stage.
We need to finish.
No,
we need to finish.
We don't need to finish.
Short questions.
I think we need to begin a series of conversations. I have. You're not going to get away so easily because I have one or two questions. There's also questions that we got in private, but I'm gonna stick to some. And this is a question, a short question with a short answer from all four of you. We talk a lot about impact investment, purpose-based investment, etc., social impact. We're also running Social Impact Award here, and we are called Social Innovation Solutions. So we're in this business for the long run. But the question is, how do you see, or what is the main challenge that you see in creating not more impact, but more ventures and more people joining real impact businesses? Not just a dreaming and, I'm not talking about what I would call the pink elephant businesses, which are, we just want to help the world and make it a better place, if you understand the tone.
Ciprian, it's about raising awareness, education, involvement of authorities, governmental support, accelerators, and VCs, and we don't have VC in Romania. But I will let my guests to tell us from their experience what it's like in their countries.
Well, I think it's essential to educate social entrepreneurs. And as I mentioned in my presentation, we have the first university course on social entrepreneurship. And I can see even in classical entrepreneurial education, there is a generation growing now which is interested in impact per se. So I think we should move much more away from our social acceleration from social enterprises and bring the idea of impact to the classical VC sector, to the classical startup sector. And I think we need to connect these sectors a little bit more, because still I feel that they're more or less disconnected. Because there's interest, and I think that's the big potential for the future.
Yeah, if I can add maybe more from a kind of personal experience, but also working with many NGOs and what I think what is missing really in our region is this ability to take risk and not being afraid to fail. And I think that's on both sides, the social entrepreneurs or you know, or people that have ideas even to do businesses with some social dimension. There is this risk-taking aversion, despite our entrepreneurial spirit in Central Europe, but I think there is still this fear of failing, right? It's not like in US where you have, you know, you fail and you stand up, you draw conclusions, and it's not that you fail, that you are doomed to be unsuccessful. So I would encourage that. And on the other hand, taking risk from the investor perspective. I think I often looked at how venture capital has been developing in Central Europe, and it is really about investing, right? So we need people that are doing those pioneer investments, that are actually investing, failing, giving small startup capital to different projects, and we should not be afraid of that. So I would encourage risk-taking and not being afraid to fail from both sides. Investors, philanthropy supporters, but also the ones that are launching different activities. Try it. And if you fail it, try again.
But don't put all your money into it.
Sorry?
Don't put all your money into it.
Diversify. Diversify, right?
Thank you, Eva.
Well, or raise money from family, fools, and friends to start with, which is a grant, basically, right?
Well, if I can just say for Croatia, we are working on two levels. One is the education of entrepreneurs. Only this year we had 2 generations in the Social Impact Accelerator here in Zagreb, and actually raising awareness with them and encouraging them and helping them find the impact in their businesses and embed the impact in their businesses. But what is more important is working with the government and with the traditional financial industry, with the investors, with the people who manage these funds, the pension funds, and educate them and advocate for that. So much as the public money is turned into smart money, and smart money today is investing in impact, because there is not enough money in government budgets to meet these SDGs by 30. The business should step in and find the good models with impact.
This is a good question that we will also take with us tomorrow. For example, at 12, we have a panel called Venture Capital and Startups, What Will Change? And we will talk about impact as well, even if it's not on the agenda, with Kelvin Tan from GTR Ventures Singapore, Marvin Liao, Hila Brenner from Techstars Israel, Matei, Dumitrescu, and Diana Florescu from GRAI. I have a final question, a very practical one. If I would be a social startup in Romania, and I would like to get some form of investment from Tilia or from Feels Good or from other VCs that are doing impact capital, what should I do besides going on the website? So how should I prepare? Who should I talk to? When should I come to you?
If I may add something on top of it, it was exactly my final question. And thank you, Ciprian, for asking it. It's mostly about that the fact that in Romania there are a lot of impact startups, and we don't have an impact VC to support them. And many of them are looking towards the West, and even asking me, how can we get to Western impact investment funds to help us, to support us? What are your conditions? In what conditions would you help a Romanian startup to get financed? Co-investing maybe, or please, yeah. Renata.
Yeah. I will tell for Feels Good. I told already in the introduction that we have the mandate to invest out of Croatia and Slovenia, which is our main geographical focus. So yes, we can invest in a Romanian startup, in a Romanian company. Feels Good has big tickets. So the startup would not, we are really preferring and scouting those who are who can absorb a ticket of an average 1 million euros and make it profitable in 5 to 7 years and yield as much impact as possible. Okay. So it's very challenging.
Yeah. Anybody with a lower amount? The group?
So our lowest amount is 250,000 euros. So this is where we go. But what we have been doing now and what we have been designing for past 6 months is another fund which is called Business Angels Impact Fund, where we will match the investments of the business angels, and this one will go from 5,000 euros to 250,000, because this is the gap. But this is not ready yet. We hope it will be ready in 1.5 years. But we are seriously designing it now.
Matei, let's do that as well.
Yeah, what about setting up an first Romanian impact fund? Because I am sure you have a number of business angels that are actually directly putting probably 50K, 30,000 euro, 50,000 euro in different types of projects, actually taking a lot of risk, right? And I'm sure many of them lost the money. I think you are in a position, taking the example of Silke, in Czech Republic, to really build a first impact investment fund in Romania. And I'm sure there are people on this conference that would be interested to do that. So I would encourage that. Why are you pushing companies to go outside of Romania to look for investors if you can actually build something locally? And there are good examples to follow. So I would encourage that.
Well, maybe I give also my perspective. I can only support whatever said, but on the other side, I think it's still a very early stage market in all of our countries, including the Czech Republic. So, we had our test fund, or we have our test fund, and we will certainly grow in our next fund. So I think for the moment, what I could offer is co-investment if the company has impact also in the Czech Republic. That means it should really grow into a regional project at least. But in the future, I think I hope we can make investments, co-investments in other countries, including Romania. And we have started to discuss this. And I think that's what it's needed. It's maybe more cooperation among us, because for one country, a small fund doesn't work so much because of the early stage and the limited pipeline. So I think we have to cooperate, and maybe we can set up something together. So
thank you very much to all 4 of you. We will continue to set up not a fund, but a pipeline. Don't forget, from 2 o'clock until 5, you can watch some of our Future Makers startups in our Future Makers Incubator. Today, I think we have about 15 startups that pitch. We had 11 yesterday. And don't forget, tonight from 7, a special, the 3rd edition of Future Makers, 20,000 euro, so small tickets, but it's not even a ticket, it's a grant, so it's from parents and friends. 20,000 euro to those that need to give it a go.